that's why I say this is very much like Apple's 2014 moment, because the return to scale for Tesla over the next decade is going to be radically different than the return to scale over the past decade. So it is natural, the more digital a company is, the higher the PE ratio becomes. And where that matters from an investing standpoint is you have a whole bunch of people who are screaming and yelling about high valuations who don't understand that's exactly what you want to see when it comes to a company like Tesla, because every customer they add costs them almost nothing, but yet the margins are off the charts. Stuff, PE ratios and price to sales and price to book and blah, 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 blah. It's taught as dogma today, but what people don't realize is that stuff is like bringing a knife to a gunfight. It doesn't work anymore. The only thing that most of the investing public has gotten right about Elon Musk is they've been consistently wrong about what he's anticipating. And so if you're an early investor, if you're a serious investor, if you're a retail investor who understands where you want to go and what you want to accomplish with this stock, I submit the smarter move is to be on board now. Because when this train starts moving, it's going to move so fast that everybody else who's not on board is going to be standing there with their hat in their hand going, oh, what happened? Oh, now what? And then, of course, you're going to see a bunch of retail analysts come on and say, well, it's great at $700.
The world is changing fast right in front of our eyes. Today, we get to speak with someone who foresaw and correctly predicted some of the most significant turning points in modern market history well in advance. The dot-com bubble, the global financial crisis, Nvidia stock split, and the rise of Palantir as examples. So what about Tesla? Last July, he was on national TV saying that Tesla will double or triple in the coming months, and he sees Tesla becoming a $20 trillion company. Keith Fitz-Gerald is principal at the Fitz-Gerald Group, which provides consulting to professional wealth managers. Keith has done more than 3,000 primetime appearances on Fox Business Network, CNBC, Yahoo Finance, Bloomberg, and other networks around the world since beginning his career at the Wilshire Associates in the 1980s. Keith also publishes the popular Morning Five with Fitz and One Bar Ahead for individual investors. Welcome, Keith. Thank you so much for joining me.
It's a privilege and an honor. Thank you so very much for having me. I can't wait to talk about Tesla. It's one of the most exciting, dynamic companies on the planet right now.
I know it is, and I'm glad that you see it too. And you're one of the few, honestly, which is weird, right? One of the few talking heads that go on these shows that gets Tesla. And you are, so we very much appreciate the Tesla investors that you're out there. And you've correctly predicted so many big turning points. But the one, of course, I'm going to focus on right now was in July, you said Tesla's going to be a double or triple. And you talked about Tesla becoming a $20 trillion company. Why don't we start with that?
Sure, I'd be happy to. This is an interesting company at an interesting point in time because we live at a point in human history that's an inflection. I call it the sixth wave. And we saw the introduction of steam, we saw the introduction of power, we saw the introduction of penicillin, the internet itself. But now what we're seeing is the data creating data and actionable information. That's where so many people go wrong about Tesla because they're still thinking about it in terms of how many cars is it going to deliver? Well, how many vehicles can it produce? What can that look like? They don't understand. That's like calling Apple a computer company these days. It doesn't work. You've got to think forward.
Yeah. And so how did you know that it was going to double or triple? This was in July. This was when the stock has been flat for 2-3 years. This was when it was, by the way, I just did this show. It was the most shorted stock in July. And then just this week, now it's the most held stock. Whoa, what a flip. It's not just the most held. It's like that flip from most shorted to more. Meaning today, in July, you stuck your neck out, said in national TV, it's going to double, triple. How did you have that conviction?
Well, there's a couple different things. We are a very quantitatively oriented shop. When I was growing up, I was king of the propeller heads, nerd beanie and all. And so we use some proprietary networks and metrics. And some of that is anecdotal, meaning, whenever I'm picking up on social opinion, it pays when everybody's on one side of the boat to go look at the trade from the other side, which is a lot of what happened in July. When everybody thinks they know something, you always want to look at the other side of the trade. I've been doing this 45 years. That's a lesson I've learned the hard way in many cases. But the other thing I looked at was what's the fundamental case? Where is this going? How have valuations and price disconnected from the fundamental business opportunity? And from there, it's actually very simple. So number one, we have a lot of people poo-hooing and stomping on the stock, shorting it or wanting to short it. That's what we call in the business a widowmaker trade. Whenever you see so many people saying, hey, I got to short this because it's going to go to hell in a handbasket, you almost know that that's never going to happen. Why? Because companies like Tesla, where you've got the fundamental case for expansion, building and getting stronger stronger by the minute, that's almost a slam dunk to go the other direction. I looked at the robotics, I looked at the AI. It reminded me very, very much of two other pivotal points in Apple's history. 2007 when they introduced the iPhone, and I saw the same thing happen. In 2014 when they introduced services, and everybody fell off their chairs to roast me, saying there's no way that was ever going to amount to anything. Today it's a $100 billion plus run rate. Tesla is very much the same thing. This is very much an Apple moment for Tesla. So that's where I stuck my neck out and said, you know what? Let's put my money where my mouth is and go for it.
Okay, well, another one that you stuck your neck out is pretty bold for, specifically a kind of a portfolio manager, actually somebody who advises portfolio manager to say 20 trillion. So a lot of people are going to laugh at that number. Are you kidding?
They did.
Tesla's going to be a $20 trillion company. Apple today is up 4 trillion, like that. And you're going to go, Tesla's going to be a 20 trillion. That's...
Yeah, well, again, I've been doing this an awful long time, and it's a good thing I've got a thick skin because I'm not the smartest bulb in the bunch. Let me tell you, I'm just not. But I have been given a gift for whatever reason to see these things a long time in advance. And so, it reminds me very much of Apple. It reminds me very much of Amazon. It reminds me very much of Microsoft in the early days. Whenever you see something like this happen, it's a horse you want to get on and run the race with. That's the move for Tesla right now. And so $20 trillion is not a stretch if you extrapolate where robotics is going, what the data is going to mean, what the margins are going to look like, how this is going to change our company. Because again, people are still thinking about this company in terms of cars. And it drives me bananas every time I'm on television. So, aren't you worried about deliveries? No, because every vehicle out there has the ability to instantly update, instantly revenue-tize, instantly monetize whatever's going on. The Teslas that we own have already updated themselves several times, in the last few weeks. And every one of those times is an opportunity for Tesla to earn money, to get better data, to do insurance, and you name it. It's an opportunity to do something with the stock, and the market doesn't yet recognize that.
All right. So I interviewed one of the best Tesla retail analysts recently, Yashu Sharma, just this morning. And he said that the run-up of Tesla stock from November, obviously exactly timed perfectly with the election. Everybody agrees that that was one of the big reasons. He believes that it's also because it's also associated with AI, because Tesla's buying all the top market cap companies are all buying chips, like, hands over fist, whatever they can get hands on. But it's Tesla that was, number one, lower valued, and two, buying the most and showing the greatest potential with real world AI. Do you think that some of the market jump that's happened in the last 3 months is associated with AI?
Oh, there's no question. In my mind, it's associated with AI. But more specifically, it's associated with the recognition that it's going to change the bottom line. So there's something called return to scale that we focus on quite a bit when it comes to digital investing, and whether it's Tesla or Apple or some Palantir. What does a company look like when it invests digitally? Now, one of the great misconceptions, and one of the things I just go around the mulberry bush with conventional analysts on, is value investing's blind spot. They continually hammer on valuations and PE and price to sales and everything else, all of which were set up using accounting regs that reflect the economy of 100-something years ago. So, for example, and to get very specific here, if you're talking about John Deere and you're making tractors, or Ford and you're making cars, you've got to spend billions of dollars to invest in physical plant and equipment. By accounting regulation, you have to amortize those. You have to capitalize those things over long periods of time, because the assumption is you have to split up the usage over those periods of time, and then they might get to sell a product. But accounting regs, the worldwide, when it comes to digital investing, you have to expense that stuff. So it is natural. The more digital a company is, the higher the PE ratio becomes. And where that matters from an investing standpoint is you have a whole bunch of people who are screaming and yelling about high valuations who don't understand that's exactly what you want to see when it comes to a company like Tesla, because every customer they add costs them almost nothing, but yet the margins are off the charts. And that's where we're beginning to see the acceleration. That's why I say this is very much like Apple's 2014 moment, because the return to scale for Tesla over the next decade is going to be radically different than the return to scale over the past decade. Yes.
Yes. I'm loving it. Okay. Oh, thank you. Thank you. It's music to our ears, because, again, we've been talking about Tesla. I like to invest in disruptive technology. I was very early, like you, in many of these tech companies like Apple.
Yep.
And the battle that we have daily with these talking heads, and I'm a talking head too, by the way, so I get it.
Well, thanks
But
taken.
like,
I have 3,000 appearances.
you're
you're
3,000.
I mean, good
You're
grief.
the biggest talking head there is out there. We appreciate you having that. I just had one with, won't name the names, but there are definitely analysts,
Yep.
portfolio managers who are just, they're portfolio managers who focus on PE and earnings is what matters. Then why are they investing in Tesla? They should be they're truly value investors is what they are.
And you know what? They're almost inevitably a day late and a few $1 trillion short to the market. I cannot tell you.
They're like,
How many times have you seen these guys? Oh, I can't invest in this company at $6. Palantir. Oh, Palantir's terrible at 10. Palantir's at 14. Palantir's at 50. When it gets to 80, suddenly they're going to start and initiate coverage with an $82 target. I'm like, gee, thanks a lot, guys. Where were you at
reasons
6?
Why? And so the way you explained that, I thought it was very well done. So you said return to scale. So the difference is that every investment that they make today, the cost expenses, it's going to be zero because every new customer is nothing to them anymore once they made those expenses. So that's why they deserve high PEs.
Right. And in plain English, right? I mean, to really cut to the chase here, they can change a few lines of code and add $1 billion to the top line. That's what return to scale really is.
Can I have that clip? That's a great clip.
You can have that clip. Just give me credit for it.
When I said, no, you gave me the...
You bet. But that's the difference. That's the difference. People, the classic valuation analysts, right? And there's nothing wrong with that. That stuff worked for a long period of time. I began my career with that stuff, PE ratios and price to sales and price to book and blah, 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 blah. It's taught as dogma today, but what people don't realize is that stuff is like bringing a knife to a gunfight. It doesn't work anymore. You've got to change your methods and your thinking if you're going to invest in tomorrow's economy. If you want to invest in the way things have been for the last 100 years, knock yourself out. Just don't be complaining when everything else runs up 600% and you're sitting there with 2.
Wow. Okay. I like the way you think. Okay. I want to push you back again on the $20 trillion valuation for Tesla. Sure. I'm not against it. I'm not saying I'm against it. I'm just voicing what I hear from other people all the time.
Oh, sure.
How do you come up with that kind of a number? Is it mostly robots? Is it, what is it? Different kinds of real world AI? Is it mostly AI? Where do you see this?
Well, the exact method we use to calculate that is proprietary, which of course drives everybody nuts. But the point is, if I disclosed my methods, then I wouldn't have the edge that we do. So long story short, it's a combination of AI. It's a combination of the way robotics will take over or aid or impact human mobility, human interaction, the way our job services and employment markets work. It also factors in considerations like vehicle insurance, financing, energy production. This isn't about the vehicles or the robots or the data itself. It is about the aggregate value of beginning to use information in ways that have not been used before. That's where the value comes from, and it is ginormous. I may actually, believe it or not, I'm probably going to get some more pushback for this, but that figure might even be conservative.
Right. And some of us Uber bulls are saying the same thing if you carry it forward. One of the things I've heard you say about Tesla is that you said that it's very unique in that every part of it is integrated and works together. Yep. People don't understand that. Explain that a bit to people.
Absolutely. So everybody thinks about cars. And again, I have this discussion all the time with investors around the world. Well, it's a car company. No, it's not a car company. It's a distributed energy production and data processing company. Cars are about that much of what they do. And so as they roll out data, if you think about it, the car, let's just use the car, is a hub. It is processing information in real time from your driving. It is processing information from Mother Tesla. It is processing AI. It is processing dynamic decision-making, modal thought, all of which is now being pushed up into the cloud, into the mother hive, which is going to be used by robotics, which is going to be used by AI decision-making, the world's largest real-time driving database, the charging network, energy production, distribution, storage, trading. All of that begins to feed into each other. And when we get robotics on the scene, not even the robo-taxis, but robots themselves, imagine what that's going to do to elder care, to mobility, to medical care. How are these people going to change the nature of human experience? These robots are going to do that in ways that we can't even fathom today. Hollywood hasn't even come close. iRobot is perhaps the closest thing with Will Smith, but they're the robot that developed sort of sentient thought. Of course, the other end of the scale, you got the Terminator, which is terrifying. But bottom line is, we're at a cusp of something that has never before been seen in human history. So when I talk about Tesla using all this information together, the average individual hasn't thought about this stuff yet.
Yeah.
But this is what I do for a living. I have to think about these things if I'm going to chart a path forward. So to me, it's the value of all of that. It is not one element or one single technology. That's the mistake everybody's making is, oh, it's just cars, it's just robots, it's just this. No, it's not. It is an interconnectivity of data that we've never before seen in human history. There is no precedent for what Musk is doing. And I think he is one of the very few investors, very few leaders on the planet that really understands how to play chess when everybody else is still playing tiddlywinks.
And then can you speak to AI in general? So you've got Nvidia, which is providing the chips, rightfully so, one of the largest companies in the world, because it's based on revenue. They're finally selling everything that they need to make. Where does Tesla fit into this? The difference between them and also the difference between all the other LLMs that are trying to use these chips as well from Nvidia, but unknown business models.
Well, unknown business models are, sort of a point of existence, right? I mean, this is the way I see it. This is very much like Microsoft and Apple in the early days. The two begrudgingly accepted each other as competitors because they knew that in order for both of them to survive, they had to allow competition and even facilitate it to some degree. Now, to me, Tesla is so far ahead of everybody else. What they're doing is really much forming the engine that is going to use all this. So I don't know whether they're going to use Nvidia chips forever, whether they're going to go to AMD, whether they're going to build their own. I mean, all of those are distinct possibilities. I think, again, we're looking at many futures that we can't contemplate today. So those are things that have yet to be written into stone. But what we do know is that the way that they're going to assemble that information, the way they're going to pull those chips in, the way they're going to process that, quantum computing, for example, when Tesla gets a hold of that, I mean, imagine what it's going to be able to do from a computational standpoint, a scalability, operability, efficiency, going to jump yet again. I haven't heard that discussed anywhere yet, except out of my mouth.
So quantum computing?
Yeah. Well,
Didn't Google just announce that they pulled it out of the hat and they've got something that...
we'll see. But I mean, imagine what happens when Musk puts that into a sentence. I mean, he hasn't done that yet that I'm aware of. But when he does, I mean, boom, it's going to be an incredible acceleration of everything that they're working on. So to me, AI is very much generative right now. There's going to be a next step, which is kind of iterative. We're sort of working in that. But where the big jump is going to occur when we get the computational power is going to be inferential AI. That's going to be when machines start thinking for themselves and drawing conclusions from other conclusions that they've already made. So this is way beyond neural nets. This is way beyond systemic modeling. This is way beyond relationship processing. This is truly out there where we haven't been yet.
Okay. And so AI, your thesis on AI, right? We're in the middle of it. We're at the beginnings of it.
Oh, again, you talk about me having a thick skin. I made the comment a couple of years ago, I think it was on CNBC. I said, AI isn't just an investment theme. It is perhaps the largest single most sustainable investment opportunity in recorded human history. And the anchors, lost their mojo when I said that.
Right.
They just, short circuit. But they're not laughing now. They're like, okay, well, maybe Fitz-Gerald is serious.
I know. Six months ago, they were like going, it could just be a blip like the .com boom bust or something like that. I'm like,
no,
what?
No. It's and this is the thing. This is the really cool part about investing, right? And if you look at a company like Tesla, you say, where does this fit in the scheme of things? Well, if you look at history, there's an old saying, history, repeats itself. I don't think that's quite right. I think history rhymes, though. And so if we look at the successive waves in human history, which development occurred, so steam, for example, it took 100 years for that to get around the planet. And it was a relatively pronounced peak, okay, boom, here we are. But then electricity, then we have distributed generation. Every time we have a major jump in technology and a jump in innovation, what we have is a steepening time to adoption, meaning it happens far more quickly and more thoroughly than the past wave has. And on top of that, the changes are more compressed. So you've had not only a faster time into society, which it adopts, but you've also got this compression in time, which means change happens faster and more securely and more irreversibly than it has at any other point in time. That's why I say we are still early days in AI. I mean, we haven't even scratched the surface of what's going to happen in the next 5 or 10 years.
Sam Altman just said, a week ago, right? Every single year from now on is equivalent to 10 years of progress.
100%. Yeah,
in the
and I think
past.
that's probably low. I mean, I really do.
Right.
I think that's probably low because the other thing that's happening is it's like compounding interest. It begins to accelerate exponentially, and
Yeah.
so a company like Tesla again, where the thing that people still don't understand about Tesla, they're
Hmm.
still focused on these cars, is just the cars were just the first step, just like Apple used the iPhone as the first step, or Google used search
No,
as
no,
the
no,
first
not the
step.
iPhone.
It was the first step, and all of a
Yeah.
sudden, here we go. Now all the ancillary uses are coming into play. That's where the real value is, and the return to scale is.
So what? How do you answer the folks who are, you're pulling them along, right? So yes, Tesla's no longer a car company. They started saying that at the beginning of this year.
Yeah,
But yeah,
finally,
yeah,
10 years
Tesla's
after I
sure,
started saying it and got chewed up on
right.
stage for making that assumption. But yeah,
They're an energy company because I have to say it now because there's 5% or 10% of revenue. Okay, now they're saying yes, autonomy seems to be happening now. But how do you answer the people who say, but they need to get to 99.9999. It's going to be 100x of magnitude change still. Maybe I don't believe everything Elon says. He said it every single year. Now they're saying that by mid next year, which is 6 months from now, they're going to get to safer than a human, and we're going to launch unsupervised robotaxi by the end of 2025. But they are non-believers at this point. What's your? Do you work in those short time frames, like a year?
sure we do.
Mm-hmm.
And every time I hear that comment, I just look at him and I say, yeah, and you must have loved Steve Jobs too.
Mm.
Betting against Elon Musk today is a lot like betting against Steve Jobs back in the day. Progress takes time, but the thing about it from an investor, right? So think about what they're really saying. The disbelievers, and I run into a lot of them all the time, saying, oh, yeah, it's not going to happen because X, Y, and Z. Okay, fine. But you didn't say it's not going to happen, not going to happen. What you're saying is not going to happen until this, until that, until this, until this. So what you're waiting for is confirmation. So what do you want to do? You want a cookie for that? You want a gold sticker that says, gee, you got it right? I'm far more interested in being profitable, right? And so if you think about how investing works, the idea behind investing is you get in ahead of major themes with great companies ahead of time before everybody else sees what you're seeing. Because if you wait for confirmation, then guess what? You might as well wait for those analysts we just talked about who are going to begin pricing Palantir at 80 because suddenly it's gotten interested after they've missed the run from 60 to 80. So, Tesla, again, if I think it's going to 3 to 5x, starting this past summer, I wanted to be in it this past summer. I'm not interested until waiting until next year when suddenly it goes, hey, they've all got robo-taxis. This is great. We ought to invest because the value's already gone. You're going to miss 90% of the run.
Well, I know people who they call themselves momentum investors. Okay. So it's been flat for 3 years. It could be flat for another 2-3 years. I'm going to stay and wait until I see it picking up. And that's what I'm going to invest in. How do you answer to those people?
Well, and I don't mean to be offensive. This is not at all intended to be offensive. But, the comment there is good luck with that, Sparky, because what you're doing is you're trying to outguess the unguessable at a time when supercomputing is taking over Wall Street, when you have 90% of the computational trading decisions driven by computers trading so fast humans can't keep up. So if you're going to be investing for momentum, I don't think so. If you're going to be trading for momentum, that's one thing. But investing because you're a momentum investor, that is a very, very hard row to hoe. It worked for a long time, for decades as I came up in this business. But I would submit that the computational environment driving that has changed radically, and you are going to be out of luck if that's how you're thinking about things, because you may never get the signal. You may never get the pullback. You may never see the trend because Wall Street's computers are hunting for exactly the same thing. And an individual investor, the average individual investor, is terribly outmatched when it comes to supercomputers.
Yeah, you articulate things very, very well. I'm enjoying this. I mean, the other thing is like some people, I think we just said it, right? It's changing so fast.
Yes.
That in 1 year it's equivalent to 10 years. So that means in 1 month, something crazy could happen nowadays. It's no longer, too crazy to say that in 1 month, the world could change very quickly in all sorts of ways. And so then how can you even, either way, right? It can be really, really bad. It can be really good, but it can change much faster than people realize.
That's the key right there. It can change much faster than not only people realize, but I run into this all the time. People are conditioned to have what I call, what social scientists call an anchoring bias. They stick with the familiar, right? And so when they encounter the unfamiliar, they hesitate or they blink or they whatever. The problem is if you don't take the opportunity, you miss the chance. And so a lot of these companies will emerge, and they will emerge so quickly and so dynamically that anybody who's thinking they're going to wait for the train to begin leaving the station before they hop on is suddenly going to find themselves left at the platform. And that's very much the environment we're in today. You know, it used to be you could wait for a pullback, you could wait for your technical indicators to line up, you could wait for all of these things to happen. But now, as computational power has increased, as zero DTE options have hedged or arbitrage risk out, now as you've got computational power hunting for many of those same technical indicators that are widely understood, and combine that with the fact that Wall Street can see all of the retail investing public's order flow, you know what? That's a recipe for disaster. What you really got to do is focus on those great companies making great decisions lined up with those big themes that are not going to go away. And in fact, are going to accelerate. And again, Tesla is at the very vanguard of that.
Okay. Now, having said everything you just said, though, you have told me that you are not a buy and hold investor, which many of us Tesla investors are buy and hold. Tesla's the company of the ages. It's got like, you know, AI and robots, and it's going to invent new things, and they're so well positioned. Why would many people think it's diversified? Why would you? Agree. Okay, so yeah, well, let's talk about that later. But let's go with, you're not a buy and hold investor. What kind of investor are you?
So we call ourselves buy and manage, and here's why: is buy and hold presupposes it's just going to throw your money in and then walk away from it, come back in 20 years, 30 years, whatever the figure is, and see what you've got when you get out. Mm-hmm. That's okay. There's nothing wrong with that. It works for a lot of people, especially with a company like Tesla. But quantitative, we also know that buy and manage can lead to higher profits. And the reason is that, like the fruit at your grocery store, you're continually recycling your inventory. So if you want to buy and hold, again, nothing wrong with that, particularly if you lack the skills or the discipline or the understanding needed to buy and manage it. But I've been doing this 45 years. We have very solid quantitative underpinnings. So periodically, we will harvest profits. When we have a pullback, we use those profits we just harvested to buy more inventory. And what we do, if we do our job correctly, is we're constantly selling for profits, buying this. There's a saying, buy the dip, sell the rip. And that's very much what we're doing. And if we do our job correctly, we're going to continually ride that up higher, because every time we harvest profits, we're able to take some of that money and put it on a shelf and never worry about it again, yet we're still in the hunt.
But you just said that momentum investing is difficult to do.
But that's not momentum investing. What we're talking about is making a quantitative decision to buy and sell based on whether we perceive value or risk.
Oh. All right. So what are the stocks that you like to hold at this point?
Well, Tesla's clearly at the forefront of that. Apple and Microsoft are there. Palantir is another big one for me, because again, you know, nobody is doing what they're doing. And I'm sure you're familiar with Peter Thiel's work, 0 to 1. We are very 0 to 1 oriented. I am not interested in N+1 choices, because I don't want a better mousetrap. What I want at this point in human history is a company that's going to be making change that impacts our world, so I can capture the structural profit shift that goes with it.
Wonderful. Okay, good names. Like them all. And then, so we were talking about Tesla being a diversified company. So typically in the past, the advice would be diversify. My own experience is that, of course, you know, inexperienced investor, you do 10 to 15 and, you know, pick and choose. But 10 to 15, you basically just wash yourself out. You don't really, you know, you might make one go well, but then the others are so bad that it just didn't go as well as you wanted to. So eventually I just started honing down and less just the disruptive tech companies that move forward. How do you see Tesla? Some people think it's a diversified company. Of course it's not, but it is in many ways in terms of the breadth of its industry that it covers. How do you see it?
I think it depends on how you define the term, right? I mean, classic diversification as an investing theory hasn't worked for 15 years. And so investors who are diversifying because that's what they've been taught to do, or that's what they've learned at university or something like that, are finding themselves way behind the 8 ball. And I'll give you a great example. So, you know, the S&P 500, we were just talking about this the other day, 20-year investor, I think it's up 600, 700%. Like, that's great. Right up until you realize that Tesla's up 18,000%, or Nvidia's up 22,000%, or you know, whatever the numbers are. You know, so what you've got to come to terms with, if you're a diversifier, is the need to concentrate. Because I'm not aware of a single building that's named after a diversifier, but I know plenty of buildings that are named after people who go after profits. And so, you know, even Warren Buffett has got a huge portion of his portfolio concentrated in stocks that he is convicted about. Now, we do the same thing. I am a big fan of, you pick your bets, you focus, you be in to win, because that's where you're going to make your money. Diversification is like spreading your deck chairs around on the Titanic. It's not going to work if the boat goes down. And again, quantitatively, that's broken. We've proved it. We know that. I'm not even remotely interested in that debate anymore. But what we do know is that these winners, these big winners, if you find them early, you latch on, you buy and manage, quantitatively, you have a far higher probability of profits and life-changing wealth than you do if you're trying around to guess risks you can't control in the first place.
Okay. We'll come back to Tesla, but right now let's go through the Mag 7s. Tell me how you see each of those companies, your evaluation of each of them. Which one do you think is a good investment today?
Okay, well, you go through the list, name them, and I'll hit them.
And well, let's go through the market cap. I just did this show just today that went down the top market cap today. We go with that one. Obviously, the big one actually happens to be Apple. Apple is right now currently higher than Nvidia. Go with that one.
Unbelievable ecosphere.
I'm sorry. Yeah, hold on. So just double checking here. December 16th, 2024, Microsoft is number one.
Okay, well, let's start with Microsoft. Unprecedented opportunity, caught everybody else flat-footed when it did ChatGPT, incredible cloud opportunity, and it brings people together. So to me, it's a stock that's suitable. I think it's fairly valued. I think it's got a lot of upside.
Actually, I'm so sorry. I looked at the wrong list. The number one is Apple, 3.8 trillion.
Okay.
Start with that one.
Big ecosphere. I think it wins the race to 4 trillion, which again, people laughed in my face when I said that, a year or two ago. I said, here we go. But same thing. It's the ecosphere. They want your life. It makes everything easier. You don't see people running away from Apple, no matter how tough economics get. You see an incredible subscription model. You got hundreds of millions of upgrades coming. You got billions of installed devices. Same kind of thing. Change a line of code, add $1 billion.
Really? So you still believe that? I'm a big Apple fan for years. I invested all in on Apple. I pulled off. The reason is I think that,
Not me. I don't think they've even remotely gotten to this.
Their Apple Intelligence is not showing up yet. Hopefully they pull that trigger. Apple Car is gone.
I would respectfully push back on that. Oh boy, would I push back on that.
You believe that Apple Intelligence is going to show up?
I think it's already there. I think, look, Siri, Alexa is dumber than a bag of rocks. Siri, on the other hand, continues to make progress. That being driven by AI. If you look at what's behind the scene, Apple has a long history of being very coy about what it's doing. I personally think that, this concept of onboard AI, I think the whole car thing was probably a smokescreen for a bigger development. And the bigger development was very likely AI, because they would have had to have that in order to run a car. So to me, I don't think there's any question that they're going to continue to press forward. We're at a very pivotal moment for their history.
No, so that part I agree. Onboard AI, the phones are so, inference ability of the phones is powerful, and few can do what they can do. All right, Nvidia, number 2 right now.
Same thing, got to have it, making huge jumps in terms of product, sells every one of the products it develops, customer lists, customers are running to them, huge margins, great management, must have products, doesn't get much better than that.
Do you see them expanding beyond the chips for research? He talked about inference chips. They just launched a new version of that. They've got platforms to support 11 humanoid bots. Where do you think their future is?
I think it's right there. I mean, again, the concept of what constitutes a robot, what constitutes sentience, what constitutes knowledge is going to change radically. And, they've got the infrastructure to pull that off.
And then Microsoft?
Same thing, linkable, bringing people together, huge cloud environment, caught everybody else by surprise. The godfather of AI right now.
Curious what you think about Google.
One trick pony, don't like them. I think management is struggling. I think that they're search driven, and that model, that market is radically under pressure, not to mention that the legislators hate it. So, I think there's some very real challenges for Google right now, and I don't see Pichai making some smart moves. So to me, I don't own it. I don't want to own it.
I felt the same way, except then they pulled out the quantum computing out of their...
Yeah, but I mean, everybody, you put quantum, it's gonna be like .com back in the day. As long as we just do that, that's what's gonna happen. So to me, that was bait and switch. That was very much Meta's. Hey, we're gonna go to the metaverse. I'm like, oh man, really? El Zucco is pulling a bait and switch. Every time he says he doesn't do something, somebody comes forward and says, well, yeah, you actually kind of did. That's another company that I think is under pressure. Why the public continues to do that and Wall Street continues to defend it is beyond me, but they do. And, I hate every minute of that stock. I don't own it and probably won't, but I'm happy for everybody that does.
Okay. So far, you and I are right on track with each other. Amazon, Not that I mean anything. I'm just like a
I know,
retail
right?
guy. I don't. You matter more, but I'm just like, good.
Oh.
Okay. Amazon.
Jassy clearly not Bezos. I don't like it. Same kind of thing. Regulatory challenges. Everybody thinks they know it because of shopping, but really it's the AWS. It's the data storage. It's that. I think they're behind on AI. I don't like it. Again, a lot of pressure on that stock. Doesn't feel well to me. So to me, people say, well, you must be bearish on Google and Apple or Google and Amazon. No, I'm not. I just think there's better opportunities out there. And to me, in my job as an investment strategist, I can't say what's good or bad. What I've got to say is where do I think the best opportunity is and how do I get my hands on it? Because I'm not interested in being profitable. Right. I'm interested in being profitable. And so my thing is there a better horse in the race? And that's why I don't like Google or like Amazon because they may do okay, but I'd rather do better.
Is there any company that I did not mention that are possibly going to become the largest company in the world in the future or the most gain?
That's hard to define because if you're a one-trick pony, if you're assembling just a position, what stock are you going to go all in? Are you going to hodl it? Are you going to hold on for dear life? Are you going to FOMO it because you fear missing out? I mean, it depends on what you're trying to accomplish, right? Because that's the other thing we do from an investing standpoint that makes us very different and why so many people find our research compelling is that we view each of these stocks as an integral role in an overall portfolio. So sometimes I want to add stability as much as I want growth because the stability gives me the freedom to pursue growth. And, if I have something like a Walmart on my hands, I can absorb the volatility that comes with a Tesla. So there's a series of trade-offs that we make quantitatively. But again, the view for us is, are we constantly stair-stepping up? Are we ratcheting up? And, that's what we're trying to achieve.
But in terms of disruptive innovation, the one that could possibly just go crazy. Is it Tesla that you like the most, or is there some other company that you're keeping an eye on?
Well, I mean, again, not to be coy, not to ditch the question, because it's a very valuable question. It's how you define disruption, right? I mean, every one of the companies that we own or that I own personally, I own because I think they have the potential to be 0 to 1. Mm-hmm. And so, Tesla is going to be 0 to 1 in one facet of our lives. Palantir is going to be 0 to 1 in another facet of our lives. Apple, Microsoft, I mean, they've all got 0 to 1 potential. The question is where and when. And so what we know from history is that there are 10 to 15 of those stocks out there right now in various stages of maturity. So everybody's looking at the hot stocks. That's the wrong question. If you want to succeed in this business, you want to have longevity, you want to build real life-changing wealth, you got to ask yourself which companies are going to be there in 10 to 15 years. You got to flip that around. And that's a very short list.
Any comments on the buy side and the sell side for Tesla? Just how they behave, how they act, what they've been saying these days?
It's hard because every one of these people is certainly smart. I mean, they've all got their own viewpoints. And, my grandfather used to say, opinions are like belly buttons. Everybody's got one. So, you got to approach that with sort of that grain of thought in my mind. I don't fault one side or the other for having their opinion. What I do get concerned about is when I see a lot of people that are late to the game, I do get very frustrated with investors who just won't think for themselves about what's happening right in front of them. They wait for confirmation. They wait for the sell side reports. They wait for, the top 10 lists. If you're doing that, you're going to be a day late and you're going to be $1 short and you're going to have to put up with everybody at the next neighborhood barbecue that did get in on time, that did get in ahead of time. And is suddenly, under the beach in the Gold Coast where, maybe you're working under the golden arches.
What are the risks for Tesla?
I think they're pretty defined. People are going to say, are the risks going to be him? I think the biggest risk, frankly, is going to be Musk himself.
Yeah.
If he suddenly leaves Tesla, either in a pine box or he leaves because he gets bored and goes somewhere else, he is Tesla. Mm-hmm. And so the question is, what does that look like? So there's very much key man risk. But beyond that, I don't think there's a whole lot to worry about. I think if people, this lawsuit in Delaware was appalling. I think it got every CEO's attention because, the compliance costs, the ability to execute to managerial task list is very limited if the courts are going to second guess you. And, that to me is not a good measure, not a good yardstick in, the history of capitalism or business operation. And the more regulation we get, the worse that's going to become. So I think one of the other broad brush things we're looking for from an investor standpoint is that the increasing number of companies that will go private in the next 5 to 10 years is going to mean a reduced playing field for smart investors. So that adds more impetus to getting into the great companies now. because they could go private
Interesting.
anytime they wanted.
Interesting. Okay. That's one of the predictions you might have. Yeah.
Yeah. Oh yeah. 100%.
Wow. Okay. So Elon, key man risk, what would happen to the business? Would you reduce 20 trillion to zero? Would you reduce it to 10 trillion? Where do you see bots going? Where would you see autonomy going?
It's hard to say, and again, I'm not trying to dodge the question here, but that's really an unquantifiable number because you don't know what the impact is. What you do know is that he is very much associated with the business. And so the thought process would go through everybody's head. The knee-jerk reaction would probably be very violent downside because the computers would get going, then they try to catch up with each other, and then all the portfolio managers and the talking heads would start making the circles on television and blah, 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 blah. Me personally, he's not stupid. He's got a good management team. He knows what he's doing. He's got great people working for him. He stays out of their way. So my guess is it would be a sharp, quick drop and then probably find its footing fairly quickly. What that looks like going forward, I don't know. But would it make me sell? Probably not.
Yeah, I think about this a lot. Mm-hmm. Obviously, like you said, it's the biggest issue. And every month that goes by, I feel more confident that there's nothing going to stop the bot progress. They're already third generation.
Well, we do have a parallel. I mean, we do have a parallel, right?
Yeah.
I mean, when Steve Jobs passed away, right?
Yeah.
Tim Cook came in, and I was harshly critical of Tim Cook on television. I said, look, he's not Jobs. And, Apple for a little while oozed MBAs rather than innovation. So I was very concerned that the company had lost its mojo. But fairly quickly, Tim Cook establishes his leadership, established his role, knew what he was doing. It became very clear that he had plans that superseded even Jobs' plans. So, Apple, as it makes its medical pivot, is going to become far more valuable than it is today. People still aren't grasping the significance of that, but that dwarfs the iPhone.
So my point being is that the innovator was there and took the innovations, launched the iPhone, launched the iPad, launched the App Store. And then from there, you got this, operation guy that takes it.
Well, this is Bezos and Jassy too. I mean, it's same. We've seen this before. We know what this is, and when it works really well. But then you get a company like Boeing, where the executives just completely lose their, and the company goes off the rails for decades. I mean, that Boeing, we're going to be lucky if Boeing survives as a national strategic interest. I think there's a very good case that it might not, and that's a sad day in American industrial history.
And then Elon himself. What's your thoughts about, his involvement in politics? Seems to be that it turned out to be the opposite of what people think. It's been a tremendous return on investment for Tesla at this point, right? It's the opposite of what they say.
Well, it is. And, I'm not smart enough to do politics. I do money. And, what I know from a financial standpoint is that, people are going to say, hey, because he's in politics, Tesla's going to benefit. I'm going to take the other side of the coin and say, no. In fact, it's the political structure is going to benefit because he's in business. And, I think we're going to see radical change in our government because here you have a clearly successful, clearly dynamic, clearly forward-thinking individual involved in a structure that's hundreds of years of tradition unimpeded by progress. And anytime you get that mix, you're going to have big change. So, whether this is good or bad, I'll leave that to the people that are smarter than I am. But what does it mean financially? I think it's going to be good for business. It's going to be good for Tesla. It's going to be good for investors in general because it's going to bring the focus back where it should be, which is on innovation and profits.
Love it. I agree. And then macro?
In terms of?
What are you predicting? Is it 2025? S&P, because it looks like that you accurately predicted these economic macro for year-end projections ahead of time. July, you did that quite well.
Yeah, I did. Thank you. I got within 0.5% a year in advance on that last year. 2 years in a row. I don't know if I could do it a third year.
No,
I don't know. But I mean, we do have a tremendous.
This is useless for me to ask you what's going to happen this year.
No. Okay. Opinions are
right.
like belly buttons. We can all have one. My take right now, based on what I know about the numbers, is I think we're going to see a run to 7,000 by mid next year, mid 2025. We're going to see a pullback. That would be normal. That would be state of the affair for everything we know about history. But then I do see us, if we get that out of the way successfully and absent, a force majeure, a black swan event, I do see us going 7,100 plus on the S&P 500 this time next year.
Okay. So very bullish.
Tech stocks are going to do even better, by the way.
Right. And then what's happening So if things like that happen, what do you think about the big money flowing to Tesla? I just said at the beginning, mentioned that it's now one of the most widely held stocks now.
Well, it has to be because of the way, it has to be because of the way institutions work. It has to be because of the way indexes work. And it has to be because of the way passive investing works. As Tesla grows in capitalization and as the price appreciates, every one of those indexes, every one of those ETFs has to rebalance and has to accumulate shares. So number one, that's normal and it's a good thing. I'd be very concerned if it wasn't, because I mean, the bigger system is broken. But number two, I also think that the added institutional interest, because of the focus on where he's going with AI and robotics, is a good thing, because that lends support to the price. And what I mean by that is that once certain shares get into endowments or funds or pension funds, be it defined benefit or contribution, they will never see the light of day again, because they're going to become a foundation in that portfolio. And that's happened with Apple, for example, over the years. It went from sort of a speculative tech company to a safe haven play that every institution of any size anywhere in the world has got to either own or hedge. And so I see that happening as part of Tesla's run to that, that high $1 trillion mark.
Gotcha. Very interesting points. What's your thoughts about the retail community for Tesla? It is a very unique, I don't know if it's ever existed before, but the power, initially for the longest time, retail held the most shares, had the most power. Now, of course, we're 50-50. And if anything, institutional will start to, as you just said, take over. But regardless of that, we're not just retail holders of the stock. We're activists. We actually make change and we move, especially led by Alexandra Mertz, good friend of mine, that this retail community is kind of like tight. We all mission driven. There's that sense, have you ever seen that before in any other company? I mean, I just mentioned I was a big Apple fan, but I was never one that would talk to other Apple fans. It's like, hey, can we go talk Apple every day? Like I was close. I think
let's go to the coffee shop and talk Apple. Yeah,
I was very close.
I know,
but of course, that's all we do with Tesla all day long is talk Tesla all day long. But it's like a bit more mission driven. And what's your thinking about the Tesla community?
Well, number one, how cool is that? Number two, thank you for including me, because, even though I make my living in this world, in this marketplace, the retail community has been very gracious because they've seen me as one of your own. If I'm talking about it, I own it. I'm not out there doing the whole Wall Street thing. People say I'm the breath of fresh air in a sea of hot air. And that's a badge of honor because I can see things differently. So to me, the retail environment is very exciting. The retail investor is super knowledgeable. I love the fact that everybody in the retail environment has been right and Wall Street has been as wrong as the day has been long. And so to me, that's a badge of honor. It's a sign of excitement. It's a sign of encouragement, because this is one of those companies that's going to change the world, and the retail investor knows it. We know.
But can the retail investor move the stock or not really? I mean, we saw that with GameStop, but that was more of a meme kind of thing. Can a retail investor really make it move, or is it now done? Like the institutionals control it all?
No. I don't think it's done by a long shot. And here's why. Okay. If you're talking about moving it, right? I mean, that's sort of some would call that manipulation. Some would call that structured change. It depends on where you come down on that term, right? But moving a stock is different from owning a stock because you believe in it and you invest in it and you want to see it run into the future. I would submit that the single biggest strength of the retail investing community when it comes to Tesla today is the fact that we're not going anywhere. We're buying the products. We find it intellectually stimulating. We find it financially compelling. We find it emotionally exciting. The only other parallels, there's very few parallels in history where you see this kind of fervor. Apple was one of, Harley Davidson was another for years and years and years. People just simply don't get that excited about a brand. When you say, I'm a Tesla owner, everybody goes, wow. And what did you do? How'd your car? And the conversation just rolls. And you don't see that very often. So to me, again, it's a tremendous sign of strength. Is it going to move the stock? Maybe not like you'd think in terms of move, but is it going to move the stock forward? Absolutely. I think Elon is very sensitive to this. He knows the retail investor is somebody he can count on. He is building towards our future as he takes Twitter, now X, builds a super app around that. The cars that are going to begin to process that, the robots, the AI. Again, I think he thinks that we matter. And that's exciting to me as a retail investor because I'm one of them too.
Yeah. Now, I'm glad that you're actually a consultant to these portfolio managers. And so as you consult them, are you banging your head against the wall? Are you able to
Sometimes.
convince some of them? Simon Hale is another portfolio manager that I've been talking to quite a bit last 6 months. And obviously 6 months ago, his clients, now he's an actual portfolio manager. So his clients would call him up and say, what the friggin' did Elon say now? Sell, sell, sell. And he had to talk them off the cliff.
Yeah.
What do you, but in your case, you're talking to portfolio managers. Is it now they've convinced? Are they all buying now, or where do they stand?
Oh, it's all over the map. It depends on, how old school they are, what they're trying to accomplish with their clients, where we really come into our own, what we do that helps them is we help shape their thinking about where the world's going, because so many of them are trapped in where the world's been. And so, in a lot of cases, many of the sharper portfolio managers are accepting of what I have to say. They understand that the paradigm's shifting and that they've got to change their methods, if they want to keep up. So that helps them tremendously. But there are others where I might as well be talking to a brick wall or playing catch with somebody that isn't there. I mean, you know very quickly which way the wind's blowing when you walk into a conference room.
Okay. So you do, obviously you're recommending Tesla?
Yeah.
And what do you lead with?
You're
AI?
stupid if you don't buy it.
Okay.
What you see with me is what you get. I mean, I do this on television. I do this in the boardroom. It's like, guys, what part of this are you not understanding other than the whole part? And then, it doesn't matter where you want to start. You want to start with cars? Fine. You want to start with AI? Fine. You want to start with robotics? Fine. You want to start with big data? Fine. You want to start with insurance expenses? Fine. I don't care. Just start somewhere, because once you start pulling this apart, you're going to see all the different things that make Tesla what it is. And then all of a sudden, I call it the Christmas light phenomenon. It's like you ever put a Christmas light string in, and when they warm up, they kind of go, and then like parts of the light bulb start to fire. I mean, literally, you can see it around the conference table. Like all of a sudden, people are like, "Oh my God, that's not just cars." I'm like, "No, Sparky, this is not just cars." And then all of a sudden, from the other end of the table, but what if and now you're talking, but what if robotics? Yeah. What if, when you start getting the but what ifs, now all of a sudden the brains are firing, and they've gone from, hey, I don't want to hear about this, to, ooh, tell me some more. Maybe we really should rethink this argument. Well, and that's the part that's problem.
Yeah. Well, okay. So the problem with Tesla specifically and Elon is the mass media is out there.
They're out to get him.
Out to get him. My own sister, right, for example, would come back with and with a good heart saying, did you hear this? Did you hear that? And because she believes and she reads, and I have to explain to her that, well, where did you get that from? Edmunds? Well, Edmunds is not going to list Tesla as one of the safest cars in the world because they don't advertise in them, and who they advertise and all that. And, sometimes it's straight out just journalists wanting to be as, they get the clicks, get the negatives and all that. So you're fighting this, right?
You're getting into it. They either get paid for the clicks or they get paid for the eyeballs. People like me get paid because we help our clients make money. Right. Okay, there's a very different proposition, but this has this parallel in what we used to call sin stocks back in the day, right? And so, for example, certain institutional clients that we would consult to at Wilshire Associates, for example, okay, if you are a religious order, then you don't want to own gun stocks, you don't want to own cigarette stocks, you don't want to own booze. Okay, fine. So you find other things in your portfolio that matter. So today, some people just can't get past Elon himself. And there's nothing wrong with that if that's your personal MO. I mean, not every stock is for every person, but the thing is, the question you've got to ask yourself is, are you in it because you like the guy, or are you in it because you want to make money and boost your wealth? And if you're going to make money and boost your wealth, sometimes that means acknowledging that the leader of a particular company drives you nuts, or maybe doesn't say things you agree with. But this isn't a popularity contest. This is about your financial future. And if you can make that decision analytically, often you'll come up with a different answer than just your raw emotions, like I like the guy or I don't like the guy.
I guess I was attacking it from a different angle, which is, as an investor, investors out there are hearing two major sides, and that's why it's a war. People like me trying to inform, and then there's people on the other side who are trying to inform, but they either
they have an agenda,
or they have an agenda. They say, I have the agenda, but I go, well, I can show you facts. I'm just trying to show facts.
But facts are inconvenient, if you've already made up your mind.
So there's the average investors still don't know, because there's a war of information out there. You don't know who's right, who's wrong. And they're saying Tesla's, not in the top 10 list of the safest cars in the world. Don't you know batteries catching fire all the time?
Well, yeah,
God. Okay, let me explain it for the 10th time, but
yeah. But that's the thing, right? I mean, again, this speaks to how our world functions, right? And the rise of social media has facilitated an environment where people can just mouth off about anything they want with almost no repercussion. Mm-hmm. And the byproduct of that is people will then begin to form opinions based on information that's half-baked or not baked at all. And so you have sort of a third or fourth derivative of information out there that's being used to formulate opinion, when in fact the facts are completely different and totally inconvenient to somebody who's already made up their mind. So we face the same challenge you do. It's like, look at the facts, take a deep breath, get off your thing, put aside all the news stories, turn off the volume. You don't have to listen. Look around with your own eyes. Are people buying more Teslas? Are people driving more Teslas? Are people happy when they're driving Teslas? Are people doing these things? What are the company happening to do? Where are they going with information? What are the things that he's really doing? And if you still come back and you don't like the guy, fine, don't buy the stock. I don't have a problem with that. The longer you don't buy the stock means the better I can price it.
Well, let's price Tesla then. So you said 20 trillion, I think by 2040, which is really far out, which is great, but still big number. Do you have a price target? You don't do price targets for like
next year?
Oh,
we do. Oh, yeah, we do, but we do them very differently than anybody else. I mean, Wall Street seems to whip these out of unmentionable parts of their body because they feel like we, in fact, have a tremendous drawn-out mathematical exercise that we go through. I think that Tesla, now that it has more than doubled off the low that, I talked about, so we're sort of halfway there. I'm thinking we have a $600 stock on our hands, a year or two from now.
Okay. That seems to be, some of the bulls are in that direction. Did you see, you might not have seen it, but just this morning, Elon came out and said, I'll publish this on Saturday. We're filming this on a Tuesday. But Elon came out and said that basically something like, there's going to be a tsunami of, like, people are not going to realize how big of a deal Tesla is by second half of next year.
Uh-huh. I think that's probably accurate, because again, the public's imagination is fueled half the time by fact, half the time by rumor, and half the time by innuendo. And I realize that adds up to more than 100%, but that's the point. Is, people have sort of brain cells up there. They scramble around and find whatever pattern makes sense to them. What you really want to do is flip that all around and say, what doesn't make sense? What am I missing? What can I learn? Where am I going to go with this? And what's going to happen is the same old thing that's happened throughout history. We're going to see a huge move. There's going to be a massive news flash of information, something so meaningful that suddenly the American people go, or the world even goes, whoa, and they got to get into it. It's like very much the Chat GPT moment, or very much the Amazon moment. And I don't think it has happened yet. I think that,
for Tesla,
again, I sort of thought that we might see it at the robotaxi event. I was imagining we might see a little more aggressive computational intensity in terms of the robotics. But what I saw was good enough. Clearly highlighted where he's taking this company. But the first time we see a robot truly show up and drive something, or we see we see somebody walk up and get something done, or we see an energy transfer in a way that we haven't seen before in terms of FSD. Who knows what it's going to be? But when that catalyst occurs, the entire world is going to know it almost instantly because of social media. Yeah. And suddenly the stock is going to take off like wildfire. Now, back to our earlier discussion, if you are a momentum investor, you're probably going to miss most of the run. If you are in it, and you're in it to win it, with something we talk about with our folks all the time, you've got to be in it to win it before it gets moving. Because these days, if you're waiting for confirmation, you're waiting for that massive green light, that bell to ring, you're too late.
I love it. Okay, yeah. What Elon said was the brutal reality of the situation will hit like a tsunami towards the end of next year. He's talking about software, Tesla software, how advanced Tesla software is.
And I agree with that. I absolutely agree with that, because one of the other things about Elon that people don't understand is that he doesn't say things at random. The press makes it out that he's saying something at random, but that's not the case. And if you look back at his history, if you look back at the business plans he's published, if you look back at every successive generational jump, he has telegraphed it well in advance. And the mistake, the only thing that most of the investing public has gotten right about Elon Musk is they've been consistently wrong about what he's anticipating. And so if you're an early investor, if you're a serious investor, if you're a retail investor who understands where you want to go and what you want to accomplish with this stock, I submit the smarter move is to be on board now, because when this train starts moving, and it's going to move quickly again, it's going to move so fast that everybody else who's not on board is going to be standing there with their hat in their hand going, oh, what happened? Oh, now what? And then, of course, you're going to see a bunch of retail analysts come on and say, well, you know, it's great at $700.
Oh, it is great at $700 though, honestly.
Especially since we got it at 200. Yeah.
No, but like every time you look back on Apple, it's like, are you buying it now?
Well, that's okay. So
now it's like it used to be an all-time high at the time. Now it's like, it's like,
okay, here's another data point. I mean, this just blows people's minds, right? Everybody says, oh, the stocks are going to go up. They're going to go down. I mean, I run into this all the time, particularly when I get off camera and everybody hiding behind their anonymous internet handle wants to take a shot at me. It's like, look, Fitz-Gerald said this. Oh, well, but the technical this, the green price of that, the Mongolian flip-flop is going to, I mean, it's like, God, guys, take a chart of your favorite stock,
right? Put
it up on the max view. Pick any point in history and tell me it was overvalued, because history shows that the markets have a tremendous upside value over time, upside bias over time. And so the question you want to ask yourself is not, is it going to go down tomorrow? The question you want to ask yourself is what happens if you don't own it, it goes higher, because odds are that's what it is going to do. There may be ups and downs. That's the state of affairs. That comes with the territory. But from an investing standpoint, if you find a great company, the probability is it's going to be far higher at some point in the future. And the question is, how do you manage that? What tactics do you use? How do you stay on board to buy and manage it through that journey, not chicken out and get scared out of it?
Love it. All right, Keith. Well, I'm going to be stealing quite a bit. You gave me permission.
Well, give me your credit. Buy me a drink sometime. We're good.
Yeah. Okay, you're good. Just a drink. That's it. But these are gold. These
statements you're very kind. Yeah. These are all things we talk about with our clients. And again, just
they're great.
Just say, hey, Fitz-Gerald said, and I'm.
Yeah. So you go to Keith Fitz-Gerald with a dash between Fifth and Gerald.
Fitz-Gerald. No, Keith Fitz. Yeah. Yes, we have rented lips. Keith Fitz-Gerald.
Sorry, there you go. I did it. Fitz. Keith Fitz-Gerald with a dash in between. And you can check him out because he's not only an advisor, consultant to portfolio managers, he's also got for individual investors, you can sign up for Morning 5 with Fitz and 1 bar ahead. Fantastic. I can see why you've been on 3,001 shows.
You're very kind. Well, the 5 with Fitz, so people know where I'm coming from on this, right? I started publishing those on a lark. I've written those for my own use for decades to clarify my own thinking about the markets. And when COVID hit, somebody said, well, you ought to publish those. I thought, nobody's going to be interested in those. Nobody's going to want to know what I'm thinking about the markets. And they said, just publish it anyway. So I did. My biggest fear was nobody'd show up, and now everybody showed up. I mean, we have tens of thousands of people reading along, pros, retail, all 42 different countries around the world. And it's been humbling as heck to know that my perspective is mattered in a lot of people's lives. So if any of your audience is out there, it'd be an honor to have you on board. It's a lot of fun. It's irreverent. And, again, what you see with me is what you get. No games.
I'll put all that in the description. Sign up with him. And thank you so much, Keith. Obviously, we as TSLA investors, you're just one in 1,000 of other people who are saying the opposite. And we're just like, why? I have many of us do shows every day, just laughing at things. What did they say next?
It's just like, guys.
So for you to be there and I invite you there, thank you for doing what you're doing and sharing the right information.
You're very kind. Thank you for having me.
Thanks, Keith. Okay.
Appreciate it,
buddy. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.